Welcome to our AJAG PD Pod, the place for discussion, debate, and learning about all things accounting. Our hosts, Ivan Tabak, Jonathan Tucker, are CPAs that have been in practice for more than 3 decades. Together, they bring varying experience and viewpoints to the table, not to mention a little humor, too. Join us as we talk through current issues and hot topics, tap into expert guest insights, and enjoy the odd walk down AJAG memory lane. Before we begin today's podcast, please note, although the educational material within the podcast has been carefully prepared, none of the persons involved in the preparation of the material accepts any legal responsibility for its contents or for any consequences arising from its use. As well, the podcast material and the references contained therein may reflect laws and practices that are subject to change. Advice regarding a particular fact or situation should always be reviewed by a qualified professional. This podcast is produced and distributed by AJAG Professional Development. For more information about AJAG or any of its offerings, please visit ajag.ca.
Hello, everyone, and welcome to today's PD Podcast, episode 12. We'd like to welcome everyone to today's podcast, and we're joined by Marcus Guenther. Marcus is from Focus HGK, and he's here to talk about general practice concerns and what's happening at small firms. So, Marcus, welcome.
Thank you for having me.
You've been doing courses for us, preparing and presenting courses for, I don't know how many years now. Today we're talking a little bit about how the environment's changed. So tell us a little bit about yourself first of all and your practice, and then tell us about how things have changed and what we as practitioners should be aware of.
Certainly, in terms of what I do on a day-to-day basis, is try to assist firms and practitioners with compliance issues. So and on top of the training. So what I always try to put into the training is what's my experience in practice, and it's basically what I'm seeing within the profession. I kind of wanted to just talk a little bit about today in terms of assisting firms with preparing for getting through inspections, putting their systems of quality management together, and kind of going through and trying to understand really what the risks are in a practice, because just because you haven't had an issue with an inspection or with clients for the last 30 years doesn't mean you're not going to have one next week. So really it's kind of making sure that the environment's changed, which is kind of, I think, one of the topics today.
And what has changed? So is the approach of the profession now different than it was before? You talked before we started filming, you were talking about changes before, and this is like that change with CPAP.
Correct. So if you kind of go back to the days before CPAP, you had 230 firms that were auditing public companies, and now you have less than 100. And from a regulatory point of view, it probably makes sense to say there should be less people doing more concentrated work. And I think you're seeing that kind of push in the profession. I see that from people talking to me saying, is it becoming harder, or is it just me? And no, it's not just you, because you have a number of issues that we should explore in terms of compliance, but also in terms of a difference in mentality. One of the key differences when CPAP came on is, as a regulator, they looked at it and say, I want to understand your firm's quality control processes, and to understand that if I look at that, then the outcome, like a control system, should be good files, rather than focusing on the files and then trying to infer what your process is. So, for example, one of the early clients I had that went through a CPAP inspection was a 2-partner firm, 3 or 4 staff that did some public companies. And these are really small public companies that maybe had 1 or 2 balances on the balance sheet, no operations, so really simple files. Well, they came in, looked at 2 files with 2 people for 2 weeks, and issued a 120-page report. Wow. And over about 80 pages of the 120-page report was the fact that there was not enough processes within the firm. And that's sort of what's happened with the new CSQM 1 to 2 standards. You have to document your firm's processes, and there's a much bigger focus on what are the policies and procedures in your firm to ensure that your audits, reviews, compilations are of a consistent quality.
Now, there's a difference between documenting and actually performing what you're documenting.
Correct, which is why the standard requires you to not only document your firm's policies based on the types of activities that you do, so audits, reviews, compilations, and the types of audits you do, whether you have staff, not staff, contractors, etc., but then you have to come in at the end of the year, or I have to come in at the end of the year. And for each of those policies, you have to show me that you actually documented compliance with the policy and actually you followed your policy. So if I'm doing the annual monitoring, to your point, I actually have to check to make sure you've done that. And at the end of the year, you're going to conclude, even on your compilation only firm, you have to conclude one of three things. We either the system worked flawlessly, so a control test with no errors. We had some issues, but they were not, significant, and therefore the system still worked okay, or the system doesn't work and we have some problems, right? So it's a much bigger focus on systems, and really this quality standard starts with an objective, a risk, a policy, and then monitoring the policy. And at the end of the monitoring, your conclusion is we met the objective. So it's a lot more documentation.
So the trend is in the assurance world now. So let's break down practices. What's the trend in firms that are doing assurances? If somebody's in their 50s or 60s, I mean, you make it sound like it's too difficult or too risky to continue to do assurance work now.
Well, if I take the presumption that if you don't do a lot of assurance and you, and I think all of us are older at the table, and you're older and you have a multidisciplinary practice, if you go from the assumption that you probably don't have the expertise because you don't do it on a day-to-day basis, you're at risk, right? So I think
from what?
At risk from getting a poor inspection result, and not just poor inspection result, getting errors in the statements. So therefore, if you have an erroneous statement, you have to recall the statement that may have some liability associated with you.
That's always been the same though, right? That's always been a risk.
Correct, except the standards are getting more complex. Right? If I look back, like one of my favorite books on my bookshelf of professional publications is the CPA or CA handbook from 1969.
Which is
it's literally a leaflet.
Yeah, and
now you're talking 2,500 pages of audit and assurance standards, 2,500 pages of accounting frameworks. So now I got 5,000 pages that replaced the leaflet. So I think it was a lot easier before when I said, here's some general guidelines, and you're a professional, and here's your professional judgment, as opposed to here's 560 shalls that you need to work through to do an audit. And it doesn't matter how big it is.
What's the experience been, big picture, let's say with public company audits, in terms of errors, significant errors getting through and firms being sued, et cetera, despite all the new standards and the
Well, I think it's an interesting point you bring, because that's been the result. Like even if you go back to Wirecard, you go back to Carillion, like you go back to some of the big audit blowouts we've had in the last X number of years, the response has always been more regulations, more oversight, more complex standards, and it's worked to some extent, but not to a lot. Like if you look at, for example, the result of why don't you see that many people in terms of cases where the auditors have been successfully sued, they're all settled out of court because the standards are so complex now. If you hire an expert for months to analyze your files, I can probably convince a jury of your peers that you may have met 500 of the 540 requirements, but the fact you missed 40 means you're not competent, right? So they settled, but it hasn't worked. But what it means is there's more and more compliance issues to consider. So if you look at just the amount of time it would take you to document the work you've done in the PEG forms, which which a lot of people use, that's a significant amount of time now, right? Is it improve your audit? No, but it documents what you've done in a systematic manner. But it's becoming harder. And if you look at from a risk perspective, the new standards coming in for fraud, the new standards coming in for revisions to the standards for going concern, my personal opinion is that's going to, again, increase the amount of work you have to do and potentially your risk, because you're now basically giving an opinion on the entity's ability to continue as a going concern effectively.
Right. And of course, that affects fees. So what are you seeing in terms of fees? Yours as well, right? It's all adding cost, but
it all adds cost from a compliance perspective. So if you look at audit fees are increasing, but I find in many cases not enough. But what's happening is firms are running out of capacity. So most of my clients don't have any capacity to accept new work without getting rid of some other work, which in some cases you can say, well, that's a good thing if we kind of move up market. But then what happens to all those smaller engagements, right? So they're falling off. So the firms are concentrating on certain types of engagements. So I think it's getting harder for some of the smaller entities to find auditors. But the fees I don't think have quite kept up, which is one of the reasons that once you add all the extra compliance costs on in terms of documentation, inspection, monitoring fees, unless you have a certain volume. And so what do I in it? So you may ask, well, what's that volume? So I would say unless you have 5 or 6 audits and 10 reviews, you haven't got enough engagements to spread the cost over. So if you do 2 audits and 2 reviews, unless they're massive, like huge fees, you're basically doing it because you think you need to, right?
Yeah, that was exactly the reason, the situation I found myself in about 20 years ago when I used to do some assurance work and it just, dwindled down, and then I had to bring in somebody to help me plan, help me review, and it just didn't make sense. First of all, I didn't even enjoy doing the work, but regardless, it was a big client, but it just financially made no sense. I couldn't pass the
work. Work doing other stuff
for sure. Yeah, back then, it was very competitive fee wise, and the fees weren't significant. Yes, compared to notice to readers, but not like they are today. So all the extra costs just chewed into that I had to incur that I couldn't pass along. It made no sense. So I just got out of the whole thing. So I'm glad that personally I don't have to be dealing with any of this.
And are you seeing firms that are still doing this that shouldn't be doing it? Like what's
there has to be.
What's the impact?
There are, in the sense that if you want to stay in the game and you have a larger clients that you still want to do, you can, like everything else, get some help. Like, I mean, you can't outsource the whole engagement, but certainly, if you need help on certain accounting or assurance issues, you need help on financial statement reviews. We or other people can provide guidance on that, but you just have to realize that once you bring other people in, that's going to increase the cost. Right. But at least it kind of decreases your risk, which is one of the reasons I have, one of the things I put in the manuals is a consultation policies is when to trigger, when should I probably get somebody to help me with this as opposed to kind of doing it myself. But if we kind of stick on the topic of resources, all the firms are struggling with resources. And I think part of it is also who's coming into the profession, or when you talked about assurance, the lack of people that want to go into assurance. So even if you wanted to take on more work, you have to now find, like senior accountants, audit managers, and whatnot to take that work on, and that's becoming increasingly difficult from what I see.
This kind of almost ties into the podcast we had the last time with the employment agency, where they were talking about a lot of foreign trained CAs coming in, and
are you seeing,
increasing the
work
capacity
offshore? Are firms using offshore? Because the shortage of staff here is so pronounced. Do you see firms using offshore staff to do work or not?
In certain, certainly if you sort of look at some of the more basic things like certain tasks, like bookkeeping and stuff has been done a long time, basic tax compliance. But in an audit setting, some of the larger firms are using some offshore services for confirmations, like certain aspects of files. I haven't seen it in the mid-market and smaller firms in any volume because you need to effectively manage that. The only ones that I've seen that have been successful are, let's just say you had somebody in an offshore country. You have somebody there that manages that team. To just kind of do it piecemeal is difficult. So I don't see that.
So there has to be a minimum amount of work a minimum number of assurance files to make it worth your while. I'm thinking of people that are watching this today, like talk to them about a reality check here. Like if you haven't got enough work in this, then...
Well, you just even looking from a compliance cost, you have the cost of the templates. Let's just say you have audits and review templates, right? Your staff have to be trained on how to use those templates. You have a turnover, which means you need to probably more than once train the staff on how to do reviews, audits, how to fill in the forms and checklists, right? Otherwise, you're going to continually have huge review notes. Then you have to have the training hours in terms of a training office if you're going to train auditors. So you need to consider whether you have enough that to actually be a full training office. Then if you look at it and say, what are my audit requirements in terms of if you have an LPA and you do assurance work, specifically audits, back in 2019, they put together, they passed a Rule 7-2, so for example, the CPAO, on a competency map. And but it was loose, at least in my interpretation, that said, if you do audits, reviews, compilations, and tax, you need to basically have training in all those areas. You just can't have all your 20 hours or whatever in tax. That was in 2021 was then interpreted and linked directly to an International Education Standard 8, which is very specific. Now it's directed to audits, but it's very specific, and tax does not count. The only tax that counts is the tax that you would need to see, is the provision materially misstated. So if I ask you for a T2S1, I'll look up what the rate should be. I can and I have a note that basically grinds down from the statutory to the effective tax rate. I can do that, and I'm not a tax guy, right? So
especially if you call it a T2S1.
Yeah.
When was the last time you did a tax?
Exactly. Exactly. So, which is a good thing, right? That's why I don't do my own taxes. So basically, if you look at, or Schedule 1, right? But I know it's too late. It's too late. I can't recover from that. So, but basically, I can look at a tax provision and tell you whether it's materially misstated or not in most statements, just based on tax rates, right? So therefore, that means that most of the tax won't count. So now you ask yourself, okay, if I do a couple of small audits and a couple of review engagements, now I need to have all my hours in that area, which means you're going to be taking financial statement, presentation, disclosure courses, audit courses, review courses. I have firms that are doing reviews because it's not clear exactly, because the Education Standard 8 is only for audits, but it's been interpreted also as assurance. So if I only do reviews, how many hours do I need in review engagements and financial reporting? And my interpretation is all of them, except for maybe it's something tax, and I haven't gotten a good answer yet as to what would qualify for tax. So now you have all those hours of training you need to basically be able to put together. So it becomes a lot of overhead, and then you're going to pay me or somebody else to do the monitoring, a completed file monitoring, the annual monitoring, all the policies and procedures. So you look at that cost basis of compliance, which has increased, and say, am I making enough money on that as an area of practice? And the answer in most cases is no. And so now it's just making the equation worse. So a lot of the smaller firms, like my clients, will say, well, I do these small audits because, it's a community service. But now basically that community service is putting your practice at risk.
Do you ever see cases where you get smaller firms who don't have a significant number of these things, but the gross billing is significant to them? Is it still worth, in some cases, for them to make no money on it, but to retain the client, just in terms of retaining the value of the firm for future saleability?
Yeah. That's a great question, because from one perspective, a lot of the time, what I hear is there's a lot of tax planning, other work that comes out of it. There's consulting work, they call me, and other things. So I look at it holistically in terms of not just the review engagement, but also, in terms of the whole client relationship, the whole codes, the compilations I do in relation to other things. So it's a package. But to your question in terms of, does it increase the value of my practice? If it was a sizable client, yes, but the smaller stuff, I would say no. So what I'm seeing in terms of firms trying to sell their practices, I've had a few situations where, because I have a lot of clients, I can probably have a pretty good idea if somebody's looking in that geographic area for that type of client. I'm not in the business of buying and selling practices, but I can put the two of you together and kind of facilitate that discussion. It's difficult because what's happening is, as you already know, if you're trying to sell a practice with a significant T1 component, it's hard to sell. Like, that's discounted because there's so much competition on the T1 side. People also look at what is the recovery on those audits, right? So I've had people give up some of those, like a whole package of not-for-profit audits. And somebody asked me, okay, Mark, if somebody's wants to give up this whole wants to sell this portion of their practice. I'm interested. And we looked at it. I looked at the files and I said, Jonathan, if you charge double what he's charging, we'd struggle to break even, right? He was doing it as a favor to these people, right? Or do you want to do them a favor, or is it, you know, and take on the risk, right? And so the answer was no. But if it's reasonable, it has some value, but you need to find somebody that's in that area of specialty, right? Nobody's going to take on one-offs because they can't make any money. So, for example, if you had 5 compilations, a firm that does 100 will say, sure, I'd like those. You know, would Jonathan now say, hey, you know, audits are great business to get banking into. I'm going to do those 5 compilations. I saw those 5 condos. It wouldn't make any sense. So it doesn't. I would say it's struggling to add value.
So even as a loss leader, doesn't make sense. So what are the changes to PAL CPD hours? You were talking a little bit about that. Is there anything else to add to that?
In terms of submitting your hours, what I found in terms of success factor is because it's now being evaluated especially for the LPAs, and that do assurance, right?
Do assurance.
Obviously, if you don't do assurance, you're out of that EIS 8.
Yeah.
But if you do assurance, you're going to want to map your competencies to
your courses,
the courses, right? And make sure that you have sufficient courses and verifiable, right? So if you're short, I would say, okay, try to get caught up or start documenting. Many people don't start documenting your non-verifiable. So, for example, you know, if you're in the game, you're probably looking at, you know, standards and reading the handbook and exposure drafts and whatever, right? Other things you read, like you do on a tax basis.
Yeah.
You don't just attend courses, you read stuff every day.
Yeah.
Most people don't document that.
Yeah.
So at least on that basis, I would say start documenting that stuff so that you kind of get your hours up, right?
So how about practice inspection issues? What are you coming across? And is it becoming harder?
It is. In many aspects, it's getting more difficult, number one, because of certain areas of focus.
Yeah.
But so if I take, for example, a practice that does assurance, so audits and reviews.
Yeah.
I think there's a higher expectation on the system of quality management documentation. Like, you know, if I'm honest, if I go back, like Stuart and I wrote the original, you know, quality assurance manual back in 2010 for CSQC1. And the way that the practice inspections generally went, if we were honest, is the first round of inspections was they were just impressed you knew that there was a new standard. Right. And if you were smart enough to take the shrink wrap off QAM and put in, you know, Tucker Professional Corporation, you know, you were good to go.
Right.
The next time they came in, they said, oh, did you actually open it and customize any of it?
Right.
And the third time they came in, they said, are you actually doing any of this?
Yeah.
And then they kind of went downhill from there, right? So, but there was this
a phase in
recognition of this is going to take some time to put in. There's none of that. I'm seeing basically very detailed inspections of the manuals, the policies, the checklists, and we've gone very quickly from, you know, a few spreadsheets last year is okay, you know, to, you know, I'm getting questions on why we haven't got these policies in a 40-page manual. So there's more evidence on that. So if you haven't taken the time with that, you're going to be exposed, and as well as the monitoring of that. So if you did assurance, you had to have the manual in place in 22, which means you had to have your monitoring in 23 done. They're going to want to see that. And it can't just be some, you know, one-page checklist like we used to do. It has to tie back to your policy. So they're picking on the monitoring activity, saying they're not sufficient. In terms of the new standards coming in, 315 was the new audit standard. At least a dozen forms and PEG changed. It's a complex change in the standard. They're focusing on those. I see a lot of people with issues on 315. So there are certain aspects of the audit that are more vulnerable to, because they've changed, to the firm if you haven't kind of been through an inspection, right?
I feel like as people are watching this, there's a lot of people that are Googling 315.
Yeah.
So,
And on a compilation side as well. So now you've never had to have a manual before.
Right.
So now they're asking for a manual or a system of quality management documentation. I mean, I end with a manual. But technically, you know, the standard doesn't say you have to have a manual, you have to have a documented system. So that's new. So people that are just do compilations are stressing out about that because they've never been subject to that before.
Yeah.
And there's policies in there you never had to do before, like lock files down. Like, so I have to explain that concept. You never needed monitoring before. So I have to explain to compilation firms what to do there, although it's not technically there yet, but we need to.
Is it going, and so where are you seeing this going now?
And then there's CSRS 4200, which is the new compilation standard. So I think before we got on, I said, I'm getting referrals from people that have been are being re-inspected on compilations. And it's usually one or two of those both things. They didn't submit a manual. They basically said, what? CSQ on what? Yeah. So that was an automatic reinspection, and then they didn't document things properly under the new standard for compilations, so therefore that led to a reinspection. So it's being up to date, right? If you haven't kind of kept up to date and get surprised by it, then you're kind of in trouble.
Just wondering, you're talking about monitors. Is there any professional requirement that's background, standard education? Who is qualified to be a monitor, and is that something that CPA Ontario is looking at? Are you going to have, for you to be a monitor, do you have to be designated by CPA Ontario?
You're
going there.
Yeah, you're getting ahead of where we're going. I think we're going to get there. So basically, right now, to answer your question, is there's two types of monitoring. There's annual monitoring. So the annual policy monitoring, which is basically just looking for compliance with your policies. That is a lot more high-level review. It's something that somebody that doesn't have potentially a huge background in quality management could look at. So that's why technically you can do that yourself. Like if we have a monitoring program, you execute it. You cannot be independent of that process. The completed file monitoring, which is looking at a file whether it complies with professional standards. So if it's an auditing standards, financial reporting standards like ASPE, or reviews, etc. I think you have to have a higher level of skill. So you have to be somebody that's experienced in that field or reviewing files in that framework. Because they haven't done it directly, but indirectly. So for example, if I asked, Ivan to review an IFRS statement for me, he could look at it and go, yeah, it balances, it looks okay. But if he's not familiar with the 2,000 pages of IFRS standards, he's not the right person to do that. So the practice inspection questionnaire actually asks you, what are the qualifications of your monitor? So if in your particular case you hired somebody else, like for example, Jonathan does a ton of compilations. So if you said, my monitor for my compilation, my triannual review is Jonathan, and he has X number of years experience doing compilations, that would be appropriate. But he wouldn't be the right person, speaking for you, to do assurance, to say, I'm going to look at your...
I think it's just common sense knowing that you're going to have an actual...
But it should be a qualified CPA with the experience in that area.
But currently there's no minimum requirement. So you don't have to meet a certain test or satisfy CPA Ontario.
Yet. So I do a lot of work internationally. And internationally, certain countries certifies who can be monitors. And you have to go through an annual training process, and you have to be registered to be able to monitor. Now, we're not here yet, but I'm already, at least in my practice, I'm anticipating, at least I want to be prepared if we go that way, because the way I structure my files, my documentation, internally, and when I do your review, you get the report and the comments, but there's a process behind there.
Sure.
So I'm doing that as well. So if they were to go in that direction, that I can say, okay, here's my methodology, here's my policies, procedures, here's my training, here's my PD. This is why I'm certified. I think you're going to go that way because they're asking more detailed questions in that direction.
So now, this in terms of risk, the risk now extends out to the monitor, right? So if a file blows up, which had been monitored, could the party that's the client, if something went wrong with their statements and they come back to the accountant can say, well, my monitor signed off on this. Is that something you've ever seen, or
it's a risk? And there's been some files I've had to sweat on. Because they've run in, because they've taken a run at it, or there's been some other issues with it. So in terms of my due diligence, there is like I need the insurance, and in order to be like in terms of the monitoring work I do, it's technically practicing public accounting, which means I run it through an LLP. I have insurance. It is a risk, which is why I'm quite particular on choosing clients and the type of files that I do. Like I don't want a high risk file either, because generally speaking, you're going to give me the largest, most riskiest, most complicated file you have to review. Right. You're not going to give me the easy stuff, right? Because you want a second opinion. So I have to have a process that I'm reasonably comfortable with. I know I'm not perfect either, but there is a risk for me, which is why I can't and I won't say, somebody said, well, can you kind of just do this quickly? I need the monitor's report tomorrow. I won't do it because I'm at risk. I can't do a quick review. If I normally take 6 hours, I can't do it in 2 to be nice, because if it's wrong, you're not going to take into consideration I only had a quick look at it, right? So, those always, what's like with your clients when they say, I've got a quick tax question, right? Famous last words. So there is a risk. So I think people that are doing the monitoring should be in the business of doing monitoring. And that's why even if you were to, and this has been my experience, even if you were to monitor each other's, do a monitor engagement letter, issue a report, and send a bill, and so it's papered as proper monitoring. What some of the provincial regulators have not accepted is, well, I'm just going to hand it to you and you're going to give me some comments back, and your comment back is keep up the good work. Like they're going to say, well, that's not monitoring, right? You didn't engage him, you didn't issue a report, there's no substance to it. You just want it to tick a box. So I would say, there is some risk. So if you take the standard monitoring engagement letter that ships with the professional engagement guide, there is a limitation of liability, if you will, right? So you'd have to prove, to your point, that I was incompetent, right? So I should have detected that issue, because even as a file reviewer, I can't know everything about that file, especially if it's not documented. So I try to limit my risk a little bit.
So what's the end goal? Is it to push smaller firms out of assurance? Where do you see that?
I think it's to bring people up, to say, if you're going to do this, you need to do it properly. Not that you weren't before, but the documentation needs to be there, which maybe wasn't there before. The training needs to be brought up. So if you're going to be my message would be, if you're going to be in the assurance, audit and review world, it's the bar has been raised. So if you want to take up the challenge, say, okay, I want to, continue to do this. I want to serve my clients. I want to be a full service firm. There's services, like if you look at the training that AJAG offers, if you look at, there are people out there that can help you to kind of bring that level up, and that makes sense. That would be great. But I think if you don't do that, I think there's a risk that you're going to run into inspection issues. And my concern with the inspection issues is, what I used to hear up until a few years ago was, well, if I kind of blow if I don't do it properly, like Ivan comes in and inspects me and he has some issues and I get a bunch of reportable deficiencies, the worst thing that'll happen is they're going to come back next year and do it again. So I got another run at this. It gets worse than that. So basically, if that were to happen, the first thing that the inspection will conclude is that your monitoring system didn't work, because otherwise, why would you have had all these problems? So they will find that your system of quality management didn't work, because otherwise, how could this file have gotten through your system, right? So that's already going to be almost a reinspection point. Yes, it could be a reinspection. The reinspections generally are tougher. It's like when you get onto out of a CRA audit, you have to be better than everybody else to get off their list. So there's a lot of work that has to be put in for that. And where you're really at risk is that you could be reported to the disciplinary committee, and that is really bad, right?
What's been your experience with that?
Not personally. not very good, because by the time the disciplinary committee, and it could be something, and I've seen it twice, not to say it doesn't happen very often, but for example, technically under Rule 204, you were as an auditor and a reviewer, so as an assurance practitioner, you're not allowed to make a journal entry or an account classification change without the express permission of the client, because you impair your independence. So let's just say you made 25 journal entries. There is a there is a paragraph in the representation letter that says the client, signs off that they've approved all the accounting classifications and journal entries. I've had 2 cases where, for whatever reason, they didn't tick that box in case view, and that paragraph wasn't there. The inspector comes in and can't find where the journal entries were approved by the client. So now you're out of compliance with Rule 204. That's not just a practice inspection note. That's a disciplinary matter. So they reported that person to the disciplinary committee, right? That's not a good day, right? But it can also be for competency issues. And if they determine you're not competent, they can prescribe courses. They could say you shouldn't be doing this, to your point earlier, right? If it's bad enough, they'll say, you're not doing audits anymore.
Now, I'll get back on the same theme as my question before. For you as a monitor, if a file's being inspected and there's deficiencies found, can the inspection, roll over into your file? And can you be subject to
your responsibility? Yeah.
Can you be taken to the disciplinary committee as a result of your client not passing the inspection?
Potentially, yes.
Yeah.
Like if it was if I signed off the file was great, like I monitored it, had 2 findings, and said, Jonathan, here's a couple minor things, keep up the good work, and then Ivan looks at it and it's a disaster. They're going to conclude that the monitoring wasn't effective, and they could take a run at me. So that's why
again, another level of risk
for people in this business, right. But generally speaking, to your earlier point, inspections are getting tougher because there's just more to pick on. Yeah. If I now want to just concentrate on CSQM1, there's a 120-page standard there I can go through with and be detailed. And most of the new standards that come in, you're replacing standards that were 20 pages with standards that are 100. Yeah. So there's much more. Even if you just compare in your world, the difference between a notice to reader section 9000 versus the CSRS 4200. There's a lot more they can ask in an inspection now on a compilation than they ever could for a notice to reader. Notice to read, as long as you put the 3 checklists in there, had an engagement letter, you're good to go.
So are you finding in general that these new requirements, the new levels of monitor, the monitoring the standards, etc., are they improving the files? Are files that you're starting to
is quality assurance working?
Is it bringing up the level of the work?
I would say in most cases, yes, because the risk is too high that if you don't, but it should be consistent. So because you typically give me the largest files, and people assume the largest way, it's always, what do you do what you're supposed to do when nobody's looking, right? So everybody knows the larger files are going to get looked at, and so those are the ones I'm going to look at. Those are the ones that are likely going to be selected for inspection. So those files, I can see for the most part the quality is coming up because you're not going to get through me, and I'm not going to take the risk for you, to your point, Ivan. And you're not going to get through an inspection, right? So, and if the file was ever going to get into trouble, so let's just say, forget Marcus and forget inspection, the real risk is if you ever get sued on this file and the documentation is poor, you're much more exposed. So that is also an aspect where, the better documentation also improves the risk assessment of your firm ultimately, right? So I do think it's improving, but where I find where people fall down is you have a larger firm that has a large number of reviews and audits, and they do some small stuff, right? That that not-for-profit that you did for $1,000 cost you $7, but you did it for $1,000 to be nice. In the past, my experience has been that would have never gotten selected. They'd look at it, $1,000 file, and go, okay, I'm not going to look at that. Now, certain inspectors will go, give me that file.
Yeah. What's really
and I've had big firms being re-inspected because they chose that one file. So it's not to say the statement was wrong. It's not to say that they didn't do nothing, but the file documentation, to your point, was not up to snuff. And so the inspection went to town on that one little file that I'd never even seen before, and got the whole that partner got re-inspected on something they did somebody a favor on, right? So even if you do that, like I would say the documentation should be consistent.
Yeah.
And if you are going to do it for $1,000, everybody in the firm should know, okay, this costs $7,000, we're doing it for $1,000.
Yeah,
this is a charitable event.
But it's no different than any other file.
It's no different than any other file.
So then it's having the desired effect by bringing, forcing firms to bring up their standards.
Yeah, and if you look at where it originated, really what it was, if you kind of push to say a regulator usually responds to something, whether it's internationally, so they all sit on. So it's IFIA, for example, like all the regulators from around the world sit at one table and talk about issues. So things that wind up causing issues there end up more locally. I'll talk about one example that we have about that. But the issue that I'm finding with some of the regulatory issues is that if you take, for example, some of the file documentation requirements that came out of the PCAOB, and look at backdating documents. I mean, there was a file, it's published, everybody can look it up. I mean, Deloitte got fined $1.6 million for backdating documents in a file. And they actually told CPA Ontario about that issue, right? So it's becoming, the documentation is becoming very, very important. So you want to make sure that, you kind of keep your, so because before, if you didn't follow the lockdown rules, it was an inspection point. Now it can be a disciplinary issue. Like if they look at it and say you backdated the whole file, I wouldn't want to be you.
What about complaints? What are you seeing with complaints?
I've seen more complaints in the last 3 to 4 years than I have in the last 20.
Why do you think that is?
Because it's easier. And so you can go online, you can file a complaint. So if you have an issue with a client and you file a complaint, it's easy. Right. Before, I think it was harder, and people, I think, have been made more aware of it. So I think it's the ease of filing a complaint. The fact that the complaints are all usually now assign an investigator and get investigated, they know they're going to cause stress, right? And sometimes what I find, if you don't manage that process carefully, sometimes it can kind of run off the rails too.
So what's your advice on that?
Get legal counsel. Like as soon as somebody files a complaint against you, I would say take it seriously. This isn't something even if you think it's ludicrous, right? Get legal counsel, get advice, let your insurer know there's been compiled, because you want to make sure that because there's counsel on the other side. The complaints is done by people with a legal background, and they're assigned an investigator. They will go through it, right? And I'll give you an example of what I call nuisance complaints, right? And I've been involved in the companies where, a disgruntled director takes a run at the auditor, right? And basically, says you're in cahoots with management or whatever, right? That gets investigated. That blew up into, full investigation. Luckily, at the end of it, nothing happened, but that was stressful.
It's the stress, yeah,
right?
And the cost.
And in your world, I saw a complaint get filed, go through the whole investigation process, and the investigation. This is in another province, went way off the rails. The complaint was something along the lines of T1 situation. Son is trying to get the taxes filed for his father. I don't know whether I can't remember whether he was deceased or incapacitated. Son sends an email on the 26th or 25th of April to the accountant. The accountant responds a day later in the morning. So let's just say it was the 25th. He responded on the 27th in the morning. That person filed a complaint saying that's ridiculous that they didn't get back to me for over a day, and that led to an investigation. And then the investigation went off the rails to looking at your whole T1 practice, and they found a bunch of things they didn't like there. And the person was so stressed out, they just said, "I'm retiring. I'm done." Right?
Wow.
And for something as stupid as somebody filing a complaint about you didn't call them back on time, and you think, okay, well, wouldn't that have kicked out? Well, not necessarily, right? So that whole complaints process wasn't managed very well, right? Because that person got really upset that it was like, it always takes two sides to tango. So that person made it 10 times worse because of the way they dealt with the inspection. Versus I think had they gone to counsel, the counsel would have said, okay, Ivan, calm down. I know you're upset, but we're going to do it this way, right? And I think it would have had a much better outcome than just losing your mind.
Yeah, get somebody to represent you. Take the emotion out.
Yeah.
Yeah.
So complaints are a real issue. Like I've seen more filed, and even if they're a nuisance, they keep you up at night.
And they're still dealt with.
Yeah.
Everyone. Yeah.
Well, because they don't know when it's filed, whether there's substance to, or they're looking into it, right? So, like, to be fair.
So we've talked about the assurance world. What about the non-assurance world? What for practitioners that are doing compilation engagements, or even those that are doing notice to readers now? What's going on in that world? What are they expected to do? What is expected to be in place? Talk about that.
Yeah.
And what are you finding?
So to come back to your initial comment, you didn't used to find a lot when you did inspections on NTRs, right?
Yeah.
There's a lot more now. So one of the things that if you were, let's just say, getting inspected in a compilation only scenario next year, what would they expect to see? They are going to come in terms of the inspection, and they're going to want to see that, and it's right in the questionnaire. So the first thing you'll notice is the questionnaire is no longer just a couple pager. It's I think for compilation only, I think it's about 6 pages, and it's called quality management questionnaire. That questionnaire basically goes back to all your firm policies, which means you need to be able to show and document that you complied with CSQM 1 and 2. 2 is basically engagement quality reviews. Now, I haven't done an engagement quality review on a compilation of my career, but it still means you need to comply with CSQM 2. So you need to basically make sure that you have all your documentation in place, starting with all of the objectives in the standard that went to a risk assessment based on what you do within the firm, whether you have staff, no staff, the type of work that you do, right, and how you perform that work to at least I think you need a manual to have policies documented in a manual, and then the policies have to have monitoring associated with it. So you need to demonstrate that right off the bat when you open the questionnaire. So that needs to be in place. That needed to be in place December 2023. The next question in the questionnaire is going to be, they're going to ask you, did you do your cyclical or completed file inspections? Now you can argue, well, the standard came in 23, I'll get to it, I haven't done it yet. My recommendation is, if you're going into an inspection year, that's probably a good time for me or somebody else to have a look at it to say, does it comply with the requirements of CS or S4200? So that should be done. And again, do it properly. If you're going to do it amongst each other, engagement letter, report, you can say the person's competent in that area. That should be done.
Are you doing a lot of these?
I am.
Yeah. Okay.
More now than I ever did, because prior to the standard coming in, I had a few compilation-only firms as clients, and it was usually more specialist type stuff.
Or efficiencies. How to improve efficiency, but now it's about compliance. Now it's about
compliance, making sure that you're documenting some of the key things in there. And there's holes, and I'll talk a bit about that side, in terms of the forms and checklists versus what the expectation is within the file. And so I'm trying to bridge that gap, with a couple of other checklists and things that I tell my clients. So we need that done. Plus you need your annual monitoring done, right? And then all the CPD and everything in place. So there is a lot more that I'm finding that people that haven't been through, they kind of get stressed out about it. So I think the one thing I can offer is, okay, I'll help you be compliant. We'll get this done. And then it's just like your clients come to you. Like your clients could theoretically do their tax return themselves.
Sure.
But they come to you because they know that you do this for a living. And that it's just something that they've just can assign to you, and it's just going to get done.
And can you help firms with that process of putting those measures in place?
Absolutely. That's
the monitoring.
That's what I do a lot. And what also
what's
works.
The process with that? What?
So basically, you would contact me. We'd understand. We try to figure out, what it is that you need. So some of the firms. I'll start with the manual. Some people have said, I hear I need this manual.
Right.
Can you help me?
Right.
Yes, we can do that. Right. Sometimes I get.
Is it a manual? Do they have to have?
Well, they don't have to have the standard doesn't say you need a manual.
Right.
But that's pretty much the expectation, because if you go back in 2010. We all had manuals that did assurance, right? So that's what everybody's thinking, including the inspectors. So I have had a lot more success with handing an inspector or staff a manual, as opposed to an Excel spreadsheet that looks like the wiring diagram for a 747 or something, right? And with a bunch of policies at the end somewhere, right? So I think a manual is necessary. So, but I've had people come to me and say, "Listen, Marcus, I spent 30 hours on this, and I still don't know what I'm doing. Can you have a look at it?" So then what I usually do is, okay, let me see if I can salvage anything you did for 30 hours to kind of make you feel better, and then put it into our process, right? So, so I can assist with that aspect of it, but also in terms of making sure that we got the documentation we need to comply with CSRS 4200, but also at the same time, firms are asking me consistency. So I give my staff a compilation. The one staff basically almost does a review engagement. So I got an entire file where they've done all this work, and somebody else has done
nothing,
a quarter of that, or nothing, right? So there's no firm policy in terms of what you, especially amongst, if there's more than one partner, especially, for example, let's just say you do a lot of compilations and Ivan as a tax partner only does a few. Yours will be different in the firm, I guarantee it, right? Because it's just different expectations. So sometimes it's also good to get, whether it's me or somebody else in, to say, do we have any consistency here? Right? And that's what your quality control process is supposed to actually accomplish, right? That the engagement are consistent. So whether you sign off on it or your partner signs off on it, it doesn't matter. The quality is the same. Those things should look the same.
And then tell people that are watching what the process of monitoring is in these circumstances. What's a year look like when they call you in? What are you going to do for that firm?
So there's two types of monitoring. The annual monitoring, as it suggests, we have to do that annually. In order for me to be able to, in order for you to be able to conclude by December 15th of that year that the monitoring worked, is that we need to basically plan that in the fall, because I need to then look at engagement files that were issued. Like if you were to give me a couple of compilations to look at, I'd need to look at ones that were issued prior to, say, the middle of November, right? So that I can get the monitoring done in November, give you a draft. We can discuss the comments. We can put that, then you can make sure that you can have that, everything signed, sealed, delivered by the 15th. And coming out of that is usually a remediation plan. Right? Because what I have to do as part of my monitoring is to look at it to say, is it a significant deficiency? Is it pervasive? Does it relate to just one engagement? It was an oops, the rest of them worked, but which just was an anomaly. Or is this a more pervasive issue, right? So then, like, for example, if I see you use the wrong engagement letter, chances are it's more than one file. So I'll pick another one. If it's wrong there too, then we have a problem. Right? So that all has to be in place by December 15th. Now, the cyclical monitoring has to be done within 3 years, within a 3-year cycle. So that can be done anytime. If I can, prefer to do those in the spring. The most popular month for me is April, because I know you're not going to want to do anything. Just hand me the file, and we'll talk about this in May. Right? So that can be done anytime, because, I mean, ideally, I should take that into consideration when I'm doing the fall monitoring. So it's better if I do it earlier. But it generally speaking, what I like to do is I like to do it before the year that you get inspected, at least, because if I find things that we can improve documentation on, it's better to do it the year before, because then you can just do it on the change if it's not significant on the next year's file.
So what would you, or what has your experience been as far as costs for us? Like, what would the fee be for a compilation inspection? Not putting the whole, let's put aside the preparation of a manual and getting the system in place, but just on an ongoing basis, the monitoring.
Like the monitoring for me, rough, like ballpark, if you look at, like how long would it, and it depends on who looks at it, and and we work on an hourly piece, but much like you do, it depends who looks at it. But generally speaking, a compilation file would not take me or any or manager more than, say, let's just say like a couple hours, usually to look at 2 or 3 hours. Then, because I have to write the comments to that. So if it's clean, it's less. So it's probably 2 or less.
Right.
If like I've had people hand me compilation files that literally have 100 pages of documentation. So I'm not going to read all 100 pages, but I have to sift through what's important, right? To sort of say, okay, we've gone way overboard here. This looks like an audit. So it can vary, but let's just say it's between 2 and 3 or 2 or 4 hours because I have to document the comments. There's probably, depending on if I look at more than one compilation, so let's just say there's 3 partners that do compilations, I have to then combine the comments, write a report. That could be another couple hours or so, and discuss the findings. So
do you just take one file? Do you select the file?
I usually pick from a list.
I see.
And I'll ask you questions about the types of files, because typically if they're an operating company, or they're part of a group, or they're or something else like that, I try to sort of see if there's something a bit unusual, because I want to kind of get a consistency of this is what you normally do, and this is kind of the one-off stuff that, because I get kind of weird questions. So that's kind of the annual monitoring, and then to kind of summarize, it is not that much. So it's less than a day's work for me to kind of if you put it all together. It's the and if you look at the annual monitoring, again, it's less than a day's work, because I'm going to look at a file in less detail, basically make sure we've kind of covered all of this, issue the annual report, and likely you're going to want to have a discussion about some improvements and inconsistencies. So it's not as big of a deal.
And then when a firm is up for practice inspection, that's one of the issues in terms of their intake on a file. Does the actual report go in?
Yes,
the work
it gets uploaded.
Yes. Okay.
So the annual report gets uploaded, as well as the completed file monitors report. So the practice inspection questionnaire asks when was it done. You put the date in there, and you upload it on the portal. Now, the question that the question that people are asking that I can't answer, because you're kind of going through a first-year cycle, is technically it's supposed to be annual. Are they going to just look at the last one, or are they going to want this one and the last one? And I don't know. I can't tell you what they're going to look at. It depends. But if it's annual, you probably should be doing it annually, be my recommendation, right?
Now, what about bookkeeping engagements? I mean, obviously not subject to the standards, but it's still a file that we're preparing. It's still something we're putting out.
But you're not putting any
you're not putting our
on it.
Right. But is there anything that's looked at? Does this in any way fall into any of these new standards, or the monitoring, or anything like that?
So in CSRS 4200, bookkeeping assignments and tax engagements are specifically excluded. Okay. Right? So if you're doing just bookkeeping and a tax return, I would make sure that you have a bookkeeping and a tax return engagement letter. You're not performing a compilation engagement, which means you're not in the standard.
Okay.
So therefore, that would not be examined in a normal inspection process. But I would always make sure that if that's all it is, because what happens then is some people have said, well, my client doesn't want to pay for the documentation under the new compilation standard. I'm just going to issue them without a report.
Right.
That's not good, right? Because if that goes out, I mean, that would be bad, because you're effectively doing compilation without the report.
Yeah.
So then, if you're just doing bookkeeping with a tax return, I would make sure that it's documented and engaged and billed like that. And then you're out of that, because that's not a handbook requirement. That's just bookkeeping.
So a client who doesn't want a compilation engagement, who doesn't need a compilation engagement for their own purposes, but it's an operating company. So the work, there is a certain amount of work that has to get done to get the numbers, cleaned up for a small business. So are you saying that I could have to go to them and say, I can't issue a plain paper statement on this. I have to do a compilation because of the amount of work that I need to do?
It's what are you reporting on? So, for example, if you're doing a bookkeeping engagement to get the numbers right, and the purpose is to issue a tax return, because this question has come up, and that client uses that tax return to go to Jonathan as his banker and say, I need a loan. Your goal was to issue a tax return, and you did that. What the client uses that tax return for is not your concern, right? Even if they use the trial balance or the draft statement you gave them as part of the bookkeeping to go to the bank, issued, because they gave you, for example, their QuickBooks file, you made the adjustments in there. As long as it's system generated, so the client goes and
it's a QuickBooks report or something.
And prints a balance sheet and an income statement, takes it to the bank. That's not a compilation engagement, in my interpretation.
And just to take that one step further, what if you find out that that's what's happened? Like, what's your response in that situation where you've prepared what's you've been engaged for, and now all of a sudden you get a call from a banker saying, "I'm looking at the financial statement. Can you tell me about this balance or that balance?"
See, I wouldn't take that on because you prepared the tax return. I've had the situation where the business has gone for sale, and as part of their due diligence, somebody's looked at the last 3 years for the tax returns and the actual statements.
So, what would your advice be then? You just don't take on those types of engagements because of that, because that could happen.
Well, one of the reasons I normally, if I back up, one of the things I usually encourage somebody with an operating company is to say, okay, you don't want to pay the extra fee for compilation. From my perspective, that's your firm branding, right? There is a certain value in still getting a compilation statement, with a CPA, having looked at it and compiled it. So I think there is still value. So even if the client wants to sell the business in 3 years, I think it's a lot better than that they are able to give you, say, 3 years of compiled statements with your, on your CPA letterhead, having done the work of a compilation engagement versus saying, here, let me print off a comparative on QuickBooks.
Yeah, but at this point, you're just trying to convince the client to pay the extra, right?
Correct. Because I think at the end of the day, you wind up with the same amount of work because they're going to hand that statement to somebody else if they're looking for finance or whatever, I would say.
Yeah, or if the business goes up for sale for that very reason.
Yeah, because in terms of a user, a precondition is there's a user to the statements or it's management, right? So management can say it's just for us.
Yeah.
But even if they don't say, well, I'd like to get a loan in the future, but I don't have a bank out of mind yet. Yeah. That's still, you can say, well, the user's a bank, right?
Yeah.
But I still think that if you're just doing a tax return, that's fine. But if you're doing any more than that, a compilation is probably better.
Yeah. I guess if you're doing more than just the tax return, that should raise flags
because
of where it could go.
Yeah. But even if you're just doing the tax, if you do a compilation and you understand where the transactions are coming from, you spend a bit more time on it, you're probably more confident in what's been filed for tax purposes. And if somebody hands you trial balance and say, do the return.
Yeah, absolutely. And to them, you might actually find something from a tax perspective that would not have even come to light, right? So, I'm just really hesitant with just doing those types of engagements just because of where that information can go.
But the amount of work is an issue, and I'm trying to work on that as well, because that really is best practice. Like if you look at best practice for review engagements in PEG, I can only tell what's in PEG and other, but all those forms and checklists for what do I do when accounts receivable, inventory, et cetera, that's best practice. Yeah. There's nothing in CSRE 2400 that says you have to do that for inventory. Right? It basically says, that could be an area of misstatements, you need to do some work. And I look at the same thing for a compilation. If you don't write down what you want to do in each section, then there's inconsistency. Like, what do you, because you do a lot of these and you have different staff, what do you expect? Right? So do you expect somebody to look at a bank statement, if they got a bank rec and a bank statement, are you happy? Do you check cutoff? If you got if they have, for example, accounts receivable, are you happy they just got an accounts receivable listing? Or do you ask a question, is this stuff collectible? Did you record all the revenue? Right? Because some people will say, well, no, that's more of a review engagement. I said, well, no. If you're saying I'm doing a compilation engagement and we're going to put accounts receivable on the balance sheet, they probably should be collectible, I would think.
Yeah. Right. Absolutely. I mean, at a minimum, do you want to be associated?
Exactly.
It's not an option. You can't be associated with anything that's false or misleading. So it just leads you into that scenario.
Right. So basically there's a stand back procedure on that completion checklist that says, based on the work you've done, are you satisfied that it's in accordance with the framework and that it's not misleading? I think you need to document some work. And so therefore that kind of stuff is where you potentially should have some firm policies for consistency.
All right. Well, Marcus, thank you for your time today. Thanks for bringing us up to speed on what you're seeing happening in the profession. And for those watching today, if you haven't signed up for our email newsletter, please do so for the latest on our upcoming podcasts. Check out ajag.ca for all of our courses that are available. We have almost 200 courses. I think we're at 196 courses that are up on the site right now. So those are available, covering a whole range of topics, not just tax. So we cover accounting, assurance, as well as tax. So take a look there. Marcus will be back with us. He's written some more courses and is going to be presenting those in the fall. You've got one coming up on quality management, customizing your quality assurance manual and designing monitoring activities. And that's on, I think, October 16th. So a brief outline of that, Marcus?
I'm going to cover basically a couple of things we discussed today in terms of how do you really take that manual, customize it, and create a manual that actually meets your firm policies. Because the worst thing you can do is put a 50-page manual or 30-page manual on the table and not follow any of it, because then or somebody comes in at the end of the year and wants to monitor it, and it's you're not doing any of it. So
will you take people,
I will take them through
that?
I will take them through basically how to get from objectives to policies to monitoring and kind of make it all fit together and try to right size it to the extent you can. I mean, there's basic requirements we can't get around, but the rest of it should really reflect what you do.
All right. So if you haven't signed up for that course, please go on to ajag.ca and check. You'll see our course calendar there, and make sure you register for that course. Marcus, a big thanks for coming today, and for everyone who's joined us. We hope you found this useful, and we look forward to seeing you next time in our next PD podcast. Take care, everyone.